Hello everyone, welcome back to my channel. If you are new here, my name is Layla, and today we are back with another subscriber financial review. 3 quick housekeeping items before we get to the email and my spreadsheets. The first thing is that if you want me to create a video just like this for your financial situation, you can submit that information to my email. It is down in the description box. I also have a list of things that would be helpful for you to include in your email. Side note, I have quite a few of these piled up, so it will be quite some time until I get to yours, but slowly I am getting through them. Second thing, if you would prefer to work with me one-on-one, I also offer that. So I have a couple of offerings on my website. That is also in my description box. Third and final thing is to please be kind and friendly in the comments. I do really appreciate this community and I want these videos to, involve the community, but if you're going to leave feedback for this person, please just make sure that it is friendly and helpful. Okay, now I'm going to read this email to you. I will say that I received this almost a month ago. As I mentioned, I have quite a few of these in my inbox, so just slowly getting through them. Obviously, that means this individual has probably made a little bit of progress since then, but we are just going to be looking at this as if I just received the email. I am pretty sure this is a woman, so I will say she. I am 30 years old and live in Buffalo, New York. I currently have a house with my boyfriend, no children, just pets, and it's 60/40 split since I make more money. We own our home, it's a mortgage. We keep our finances separate except the mortgage, so below is based on my income and what I pay. I graduated college in 2020 with a bachelor's degree in business management. I struggle to pay off my credit cards and find myself in a cycle of using them and using savings to pay them off because having debt scares me, but also having no savings scares me. I am just stuck. What is the right thing to do? Pay off all my debt with my savings, but then not have savings scares me, especially if something were to happen to me and my boyfriend or something were to happen to the house. She then listed out her debts. She has a few credit cards. A couple of them are at 0% for a little bit of time. The first one she mentioned is an Ally credit card that's going to be paid off by November. So honestly, for these numbers, I'm just not even going to count it. When she sent this email, a month ago, she said the balance was $271. So I'm going to assume that's going to be paid off this month or already paid off. The credit cards have small balances, which is interesting because you'll see what her savings is. And we're going to talk about this because your situation is interesting. In reading through this and looking at everything, you definitely need to work on your financial mindset, like your money mindset. And I know that that's difficult, but a lot of people have this scarcity mindset, especially when it comes to debt and savings and all of that. So I think the way that you're thinking and going about things is actually causing you more problems when things can be a lot simpler, With her questions, we're going to talk about all this, but she had said, pay off all my debt with my savings, but then she doesn't have any savings. But finances, just like everything else in life, is not black and white. It doesn't need to be all or nothing. Like you can do in-betweens and find something that you're more comfortable with. Like you don't have to put all of your savings to your debt if that is going to cause you to lose sleep at night. And same thing with this, like you're putting yourself in a situation where there's no medium and there can be a medium. We'll continue with that conversation though. She mentioned she just paid off her Amazon card with her savings. That was 27% interest rate, $531 was the balance. Anytime I see an Amazon credit card, I'd like to call out that these can be problematic. I think Amazon is problematic for many people, and you'll see in her, I'll bring this up again because it's in her list of expenses. And if you're somebody who has a shopping problem, you just should not have Amazon Prime. I don't know if this Amazon card was only being used on purchases with Amazon because you can use it elsewhere, but just something to watch out for because oftentimes people buy things on there that you do not need. And that's because they have Amazon Prime. There is a HELOC in here. HELOC is a home equity line of credit. I am curious why that was taken out, but that's not explained here, so we won't worry about it. But she says this is split with her boyfriend, so my portion is as follows. $11,000, 10% interest rate, minimum payment $100. Just the interest right now is due. So I'm assuming that this is actually double, so it's probably like $22,000 between her and her boyfriend, and then he pays another $100, but we'll go off of these numbers. And then federal student loans, $31,470 or so. Minimum payment is $326 with a total of 9 loans with different rates. And I did put this into my spreadsheet, so we will take a look at that. She didn't give me the minimum payments, but based off of the percentage of the balance, I was able to determine or at least give my best estimate of what the minimum payments are for each of those loans. Income, $65,000, just got a new job, $1,682.18 take-home pay per paycheck. I get paid bi-weekly, and this is after health insurance, 401k, 6% to get the match, amazing, taxes, and FSA. Careful with an FSA, I don't love FSAs. If you have an HSA, yes. FSA though, you typically have to spend that money within the year, so whatever you contribute to your FSA, it's like use it or lose it. And I don't really love that system because then it's like you could probably just put it in a high yield savings account and benefit that way. I know there's like some tax benefits, but yeah, I don't love FSAs for most people. Since I am not sure how stable my job is, I take $250 from each paycheck, the difference from my last job, and put it towards my emergency fund, so I'm relying on the income I made at my previous job. When I read that, I automatically thought that $250 shouldn't be going to your emergency fund, that should be going to your debt, because even if you do that, if you put it to your debt, you're not relying on your new income, it's still your old income, you know? But your money is better off being applied to your debt instead of your emergency fund, your high interest debt specifically, but we will talk about that. She did provide a list of her expenses, mortgage, a couple of random things, utilities, car insurance, Roth IRA, massage, those look good, phone. I'm curious if this is just for yourself. I would say that you could get your phone bill lower. And speaking of which, you can switch to Mint Mobile. They actually, if y'all remember a few months ago, I had promoted how they're doing 50% off their unlimited plan. That is still around. That's actually through the end of October. I thought it was going to end sooner, but it's been going on for the last few months. So if you haven't made the switch to Mint Mobile, now is the time to do it because that promo is ending in October. You can go to mintmobile.com/debtoverit. This video is not sponsored by them. Gas, groceries, personal/fun is a little bit high, but I'm not going to worry about that. Y'all see the Amazon Prime in there? We will talk about that. I'm going to say to eliminate it. I don't like Amazon Prime, and I strongly believe that most people should not have this. Vacation fund, $260, emergency fund, $500, pets, $100, car maintenance, $30, new car fund, and then debt. Okay, her savings total. I'm going to pop this up on the screen. Y'all are going to be very surprised because I wasn't expecting this. So in her high yield savings account, almost $29,000. Yeah, we'll talk about this. We will talk about this. And I do want to say she has her Roth IRA and 401k mentioned here, but that we're not concerned about that for this video. She did add a little bit of context. So she said, I wanted to include that my car is paid off and it is 13 years old. I do not plan to get a new car until mine breaks. However, part of my savings in the high yield would be to pay for a new car in the event that would happen. I also am expecting next year to have $700 worth of fixes on my car. That is an important call out because a large chunk of her savings of, about $29,000 does need to remain there so that if she does need a car, she can basically pay for that in cash. So now we're going to hop over to my spreadsheets because I feel like just looking at the numbers is what's going to be most helpful. And yeah, I don't need to say much else about the email. First up, we are looking at my debt avalanche / snowball tracker. This is for sale on my Etsy shop, and that is always linked down below. Of course, I plugged in her debts. I did organize this basically from highest interest rate to lowest. You'll notice that the Capital One credit card is at 0%. That was the one that she said is at 0% until I believe it was March 2024 or April. I think it was March. And then it would jump up to like 27% or something. So I think that is a higher priority to pay down over the HELOC because that's a lower interest rate. And then I put all 9 of her federal student loans here, also from highest interest rate to lowest. As far as the minimum payments go for the student loans, I don't know if they're 100% accurate. Like I said, I did a calculation to determine that based off of the balance of the total, like based off the percentage of each balance from the total. So I don't know if it's correct, but it's probably close. And altogether, her minimum payment was about $326, and that's what those add up to. Top left corner, the usual stuff. We're starting in October, and it is October, and we can see that her current debt is about $46,500, and if she made no extra payments to any of these debts, she would be debt-free by March 2034. So over 10 years from now, which is too long. We don't want that. We want you to pay it down faster. And the other thing that is concerning to me is how you handle your credit cards. She mentioned that she struggles to pay off her credit cards and finds herself in a cycle of using them and then using savings to pay them off because debt scares me, but also having no savings scares me. And so I'm not too sure what this is about. To me, it honestly sounds like you're just not properly budgeting or properly managing your money. The expenses that you sent me, if you are budgeting that each month or around that each month, then you should not be going into further debt, because we're going to look at your numbers in just a moment, but based off of your expenses and your income, you should not be going into further debt. So there's a couple of things to think about here. One, either you need to stop using your credit cards completely because you're not able to use them responsibly. I really, honestly, with this email, I just don't have enough information. But if you keep having credit card debt, then maybe you are overspending. On the other hand, if you feel that you don't have a spending problem, you shouldn't have credit card debt. Like if you want to responsibly use credit cards, you need to have credit card debt of 0. And when you make a purchase, you pay that off immediately from your income. That shouldn't be coming from your savings. Maybe initially, but that's how you get to being debt-free, credit card debt-free first. And then if you keep using your credit card, you shouldn't be pulling from your savings to pay that credit card off. You should swipe your credit card. A few days later, it processes, or at least before the statement period ends or the minimum payment is due, you pay everything off that you purchased. All of that, I kind of don't have enough to go off of, so just look into that, and you know yourself more than probably anybody else. Definitely just something for you to think about, because the question is, can you use them responsibly, or is there, something deeper going on? We are going to go back to the debt avalanche tracker, but first we're going to look at the expenses that she shared with me. So she gave me her income, said she gets paid bi-weekly, so twice a month, and I did her income times 2, which came to $3,364 or so. I listed everything here that she mentioned. I think I got this, I feel like this said $260. I'm going to leave that at $250 though. I would keep that at $250. No reason to go up to $260. As far as her debts go, that's these few right here, and I just put the minimum payments for all of those. And as you can see, if we take the difference of her expenses from her income, it does go to a negative number, -12. But this is, hundreds of dollars of savings. So even if we took out one of the funds, that puts her positive right away. So you really shouldn't be going into further credit card debt each month. You should not have credit card debt in general because of your current financial situation. So the next budget or list of expenses I'm going to show you are what I recommend for October. Okay, so I put this as updated, but really this is October, okay? And I'm going to keep these both on here so you can kind of compare them. Anything in yellow is something that I changed in her numbers. So obviously I had mentioned the phone plan earlier. Not a huge deal, but it's just why pay $67 when you can pay $30 a month, with Mint Mobile? So I'm gonna plug that just naturally. But yeah, not a huge thing. I'm not gonna lower it for October just because it doesn't make or break your bank, but something to think about. Amazon Prime is in yellow, and I put that at 0. I would prefer you to cancel that because I think it's just, you're probably spending extra on Amazon that you don't need to. We will come back to this credit card debt because as you can see, it's quite a lot there. And I'm going to scroll down a little so that you can see the difference. Emergency fund, I put at 0. So that's also highlighted because I don't want you to add any more to your savings, because you are fine. You have enough in savings. I know that a large chunk of your savings is reserved for a car. However, you also have high interest credit card debt. And honestly, it's not that much credit card debt. So for you to be keeping that much money in your savings account while you're paying so much on interest and stressing yourself out by having this credit card debt when you could literally have 0, then you can solve that problem today. And I really hope that you do this, because I have worked with people before who I've been like, okay, you're gonna pay that down today, and they do it, and it is so exciting. It's satisfying for me, so I can only imagine how satisfying it is for, to actually go ahead and do that. I mean, even when I was on my journey, when I would make like a huge payment to my car or pay off a whole credit card, it's amazing. It's really, really exciting. So I hope you do this, okay? Emergency fund, 0 for October. Instead, you are going to put any extra income to your debt. You're going to pay off a few debts this month, and then you're going to pull from your savings. So in order for you to, we're going to hop back to this real quick. In order for you to pay off your BJ's credit card, your SoFi credit card, and your Capital One credit card, you need $4,011. It's actually probably less than that, because it's been a month since you've emailed me, so probably less than $4,000 that you actually need to take from your emergency fund, and you'll be credit card debt free. So you can see that at the top, I put your regular income, and then of course you're pulling from your savings, so $4,011. And if we add those up and then take the difference from your spending, including the extra that you put towards your debt, you are still left with about $139, just because I like to, have numbers be a little bit more conservative and on the safe side. And honestly, these numbers are too high, because I'm not even counting the minimum payment. So let me adjust for that, okay? So we're doing the total balance minus the minimum payment, so that we get this right in the spreadsheet. That's something I always kind of like mess up when I do these, but the concept is the same. The other thing too, actually, I forgot to highlight this, because you're gonna be able to put extra to your HELOC as well. Look at that. All right, so first of all, let's add up what these will be. And that's actually all you'll need from your emergency fund, $39.21 instead. And probably less than that, like I said, because this is an old email, and you're still left with the $139, and then you're also putting an extra $450 to your HELOC. So all of your credit cards will be paid down, and then you're going to put extra to that HELOC in October. It's actually going to be an extra of $39.29 and $450, because you're also making minimum payments. Perfect. Okay. So we can see that for BJ's, gone October 2023. SoFi, gone October. Capital One, gone October. We're going to look at the following months now. Next is everything excluding, I don't have the phone highlighted anymore. I took out Amazon Prime, because hopefully you get rid of that. And you'll notice that I took out the credit cards. However, I rolled those minimum payments into this here. So this is $100 minimum payment for the HELOC, and then $27 from one credit card, $35 from another, $28 from another, and then an extra $400. And actually at this point, I think I put this wrong. Yeah, so your emergency fund started at about $28,000, $29,000, and that's gonna be now at this point down to about $25,000. So still a great amount. You're completely credit card debt free, and it should stay that way. Anything that you purchase on your credit card, I've said it a million times, should be paid off within a few days. Now at the top, I did label this HELOC, because now your focus is paying down your HELOC. You can keep paying the minimum payment on your student loans, but we're gonna go to your next highest interest debt, and that's going to be your HELOC. And this is literally starting in November. You can also see that what you put to your emergency fund, I still left that at 0. I don't know how you have I'm assuming your high yield savings account is broken out into different savings. I hope so. If it's not, that's definitely how it should be. So if you don't already, you should have a certain amount designated to emergency fund. If you have Marcus by Goldman Sachs or Ally. And most online savings, most high yield savings accounts allow you to have different little savings categories or buckets. So be sure you have that, but label one emergency fund and have that at a set amount. For you, I would say this can be like $10,000, and maybe the rest of it is your car fund and you're using that for if you need to purchase a new car in the future, as well as car maintenance. And I kept those on here. So you have your car maintenance that you're continuing to add to, your new car fund you can continue to add to, and even your vacation fund, which is pretty high. Emergency fund I kept at 0 though, because I would say you're probably okay. In my opinion, paying down your debt is more important, at least until you get to those student loans, or at least until you get through the high interest student loans. So yeah, just make sure your savings are organized and you have a specific balance in each, because that will be really helpful. So yeah, that's what I did over here though. You're basically adding 400 for the rest of time, because that's how much extra you would have to work with if we go based off of those numbers. And keep in mind that this is still all of your minimum payments plus the old minimum payment. So that's why I only did 400. And you can see that you would pay off the HELOC by about June 2025. So a little bit less than 2 years from now. And I would imagine throughout this time, you're probably going to come into a couple of lump sums of money if you get tax refunds, if you get gifts, or there's a number of ways that you earn income or you get bonuses or something. So it may end up being even faster than 2 years. And this is kind of hard to predict, but I kind of just kept things going. So then after the HELOC, once that's paid off in July of 2025, we go to your student loans. So now I have removed the HELOC from your line item. We are focusing on student loans. So now what you're putting to your student loans is your student loan minimum payment, all of the previous minimum payments for your past debts, and then an extra $400. So really it just continues with the extra $400 to your debt, and you still have a little bit of extra cash. So at this point, things are, this whole journey, it's up to you how you want to handle things. But at this point, like once you start focusing on your student loan debt, maybe you do want to increase what you put to your emergency fund, or there may be times where you just need to replenish it. And that is fine. And it may slow down your student loans. Maybe you just want to focus on the high interest debt ones. So like student loan number 1, 2, and 3 or so. Definitely number 1, because that one is over 6%, which is pretty high. But if you did 400 extra per month after you paid off all of your credit card debt, which that should be done this month, you will be debt free by January 2028. And that is about 5 years from now, actually less than 5 years from now. And I would also say it's safe to assume that throughout the next 5 years, you will increase your income from your job. You are educated, and you could maybe pick up side hustles or just continue to grow in your career. And with time, it's just going to get easier and easier. And plus, once you no longer have to worry about this high interest credit card debt, or having that HELOC at a pretty high interest rate, it's just going to go much, much faster. You can see by everything here that what I said earlier is really true. Finances are not all or nothing. Finances are not just black and white. There can be a medium, and that's how it should be. You do not need to feel the pressure to use all of your savings to pay off all of your debt. You can take a small chunk of it and pay off the worst debt of it, and then slowly chip at the rest of it. So hopefully this opened up a new perspective for you, and you can kind of start to improve your money mindset as well. Because based off of your language in your email, I think that you're stressing yourself out more than you need to. You're in a pretty good situation. I'm assuming it's going to get better. Be careful about spending and shopping. Be careful about the Amazon, and hopefully you take my advice as far as all of those things go. But if I was in your situation, that is what I would do. And that kind of gives you a fresh start. If you're credit card debt free in October, that's really going to motivate you. And you're just going to finish the year off pretty strong and then just roll into the next one. But you don't have to keep using your savings for your credit card debt. Let's try to avoid that. Anything that you are purchasing, you need to be paying for it with the income that you earned. Those of you watching, please comment down below if I missed anything or if there's any other differing advice that you would give to this individual. I hope that this was helpful, and thank you so much for sharing all of this information. Otherwise, thank you so much for watching. Please give this video a thumbs up and subscribe if you haven't already. It really supports my channel, and I'll see you in my next one.